Hey, if you or anyone you know is at risk of foreclosure because of the current COVID situation, job loss, a death in the family, or any of the many reasons that might cause you to have a different financial scenario, I'm here to help with stories and solutions about how to prevent foreclosure for you and your family. Now, this is for information purposes only, but I do have great connections to attorneys who can help you with this. But this is Crystal Safari with the Safari Group, bringing to you some information of how to help you prevent foreclosure. Today's focus is going to be preventing foreclosure for the VA borrower. Those are our men and women in uniform who have dedicated time, money, energy, blood, sweat, and tears to our country, who've been able to obtain a VA loan, but who may now be in some type of financial distress and who won't be able to make their payments on time. So I want to talk to you about several strategies to avoid foreclosure, and also share some successes and some stories that can help you along the way. So again, welcome. My name is Crystal Safari Roy with the Safari Group, and I'm here to help you. And again, contact your preferred closing attorney or foreclosure or bankruptcy attorney for more legal information. What I'm sharing here is for informational purposes only. So I want to talk to you about one of the first things that you can do to prevent foreclosure. And now this is before you've missed a payment. When your credit score is still good, you can refinance. You can refinance your home to maybe roll down to a better interest rate than what you had before. And you may actually be able to do a cash out refinance to roll over some other payments into that. I had a client one time do a cash out refinance who paid off several credit card bills that were, of course, in the 2 digits interest rate, some up to 29%. So if you can roll that into refinancing your house, even if you turn around and sell your house, it's going to be better for you because all that will be paid off. One of the things you can do if you act quickly, again, is to refinance your VA loan. There are technicians available for you with your servicer, your VA loan servicer, who can help you negotiate the refinance. And I'd love for you, if you need an advocate for your VA loan, to reach out to me, and I'll help put you in contact with the right people for that. Another thing that you can do is actually request forbearance. So what you're asking is you're going to contact your loan servicer and ask for them to put you on a temporary hold that you won't have to pay your mortgage based on your financial circumstances, such as money reduction because of hours worked that have changed, job loss, different situations like that. If you've had a death in the family, maybe your spouse has died and your income position has changed, you can actually contact your servicer before you've missed any payments. And there are certain financial and legal positions where they can put you into forbearance. So any payments that you don't make, let's say for 6 months, 9 months, 12 months, may possibly be put to the end of your loan. So instead of feeling stressed out that maybe in 6 or 9 or 12 months, I'm going to suddenly have to pay $12,000, $15,000, $20,000 in a lump sum, it's possible that all that will actually go on the back of your loan, so you can start over at that 9, 12 month place. Once you get a job, once you get your finances back in order, that you can just move forward as if nothing had happened. There's also a repayment plan that you can arrange with your servicer, the one that you're paying your monthly payment to. Now that may or may not be the same bank or lender that you originated your loan with, but a repayment plan is going to be before you have had 3 or so lates. So you need to act quickly to prevent foreclosure. I will tell you, in my experience, and you've probably seen it. You might have overheard some things going on in the neighborhood. You know that someone has lost a job, and you see that their house goes on the, not on the market, but it gets foreclosed very quickly. There are certain lenders who will foreclose within 90 days. So we want to be very careful to have you mindful with the added stress of job loss, and maybe you've already gotten a letter from your bank or your lender saying, hey, you've missed your payment and we're moving forward with the foreclosure process. Sometimes we can get so stressed out that we don't take action that's needed. And that's where I'm here to help you walk that path if needed. So please reach out to me anytime. I'm going to put my number below and my email address below, and give you also a link to my website, that if you feel the stress of a job loss or losing the ability to make your mortgage payment, you reach out to me and I can connect you with different processes, different resources to help you prevent foreclosure. Now let's talk about a loan modification. Some people have been successful with loan modifications where they may have had a much larger interest rate, and now they are able to modify that loan to reduce their payment, to make the payments more comfortable in this COVID situation where we do have reduced working hours, maybe reduced wages or job loss. Through the CARES Act. So that's where they'll actually change your interest rate to make it more affordable to stay in your home. That's one of your options to prevent foreclosure. Another option is to go ahead and sell your home. If it comes down to selling, remember, it's temporary. You can't afford it right now, and you might not know what your options are if you do sell. But right now we know that 95% of homeowners have significant equity. I don't want you to lose that equity by becoming afraid, not knowing what steps to take, so I'm here to walk you through that. And just to give you a success story, I got a call from my pastor who said so-and-so at church was going into foreclosure, and he wanted me to help out. So I reached out to help him, and I found out that his house was not in market condition, and that still does matter even in 2021, 2022. I do find that buyers are still going to pay top dollar for something that's in market condition, but if it needs significant work, $20,000 worth of work, buyers just walk away. So I went to see the house, and it did need some work. It needed all new flooring, it needed all fresh paint, it needed granite in the kitchen at this price point, and it also needed a master bath makeover. So I talked to him about how we could get that done and do with my company a paid at closing program where I would pay up front to do all this work, and then he would pay me back at closing because I had strong confidence we'd be under contract quickly. So whenever we did close, even with him paying broker's fees for me, the listing agent, and then also the buyer's agent to bring him a well-qualified buyer, plus about $15,000 worth of work that my company had fronted, he was able to not lose his home to the bank, but actually walked away with $40,000 in his pocket. And that's what I want to help you do, because we know that 95% or more of homeowners in our current market have equity. I don't want you to lose that by giving that up to the bank. So call me about that. If it's something that where you're upside down and it will become a short sale situation, I have a great attorney who specializes in short sales who can help you negotiate that with the bank. And the great news is he does not get paid until closing. And if you don't close, well, you've learned a lot. And hopefully you won't lose your home, but he's willing to go to bat for you to make sure that you do close. A short sale, of course, is not likely in 2021 or 2022 because most families do have equity, but just in case that you do have something upside down, and a short sale is not your only option. We may actually find an investor who will take your home, buy it from you, and then any problems, any medical bills attached, any tax liens attached, become now the responsibility of the investor. And I'm one of those. I've done that before to help families out. Another success story is there was a lady who was divorced. The HVAC went out in the home where she lived. She had moved out because she couldn't take another summer in that discomfort. So she'd already found a renter and she just abandoned the house. So when I found out about it, I found out that she was upside down. She owed much more to her lender than the house would bring on the open market without significant repairs, and she did not have the money for that. So what I did as an investor was I bought the home from her, prevented her foreclosure, and then I actually put renters in there after doing the work myself. I had renters pay for 2 years, I paid the mortgage. I made sure the mortgage was paid on time for 2 years. This seller then had her credit restored because I was paying the mortgage through the rent payments. And she actually bought a house again in under 2 years after what would have been a real crash and burn for her with foreclosure. So we were able to prevent that. Another thing that you can do to prevent foreclosure is what's called a deed in lieu or in place of foreclosure. That's where you again work with your loan servicer and say, I'm just signing the house back to you. Now, because we do have so much equity in the market, many of your servicers will say, hey, great. Because what happens is they're going to write that off. So let's say it's around $200,000. They're automatically going to write that off as a loss. But I will warn you, again, talk to your preferred lending professional and your attorney. But what the loan servicer and lender are going to then do if you sign it back to them is they will send you what's called a miscellaneous 1099 from the IRS. So they're going to report that you owed them $200,000, but now you don't owe it. So the IRS views that as income. So imagine if you made $200,000 in a year, what kind of taxes you would pay on that? You know, what's your tax bracket? Let's just use a number like 25%. It's a huge amount of money that you're going to have to come up with to pay the IRS on that perceived income, because now you've received the benefit of that money, right? So it was incoming to you and you no longer owe it, so you don't have any outgo. But then on the other hand, you didn't operate a business with business expenses, so there's not going to be any deduction to that money that you owe the IRS on that quote unquote income. The bank has a couple of choices. So they either can issue that 1099 miscellaneous and you have to pay money on that. You have to pay taxes on the $200,000, or they can issue a deficiency judgment. So let's say now they say, oh, you don't have a house and you still have to pay off $200,000 that you contracted to pay us when you took out your mortgage. So let's prevent all that. Let's have no deed in lieu of foreclosure. Let's get it on the market. I'll work with you if possible to get it market ready. You can pay me at closing with our paid at closing program. I charge a very small fee to do that because, of course, you know, it's my money, of course, over time as well. But I'd love for you to check out also with a VA loan, if you can reach out to a technician or advocate at your servicer, because what we need to do is we need to get a third-party agreement that I can speak to your lender on your behalf and take every step possible to prevent your foreclosure. So for our VA customers, we appreciate and are thankful for your service. We want to honor you for that. We want to help you prevent foreclosure. We want to help you turn around this financial situation, get it going in the right direction. So within 1 year to 2 years, you can buy a home again when you've gotten your feet established back on a firm foundation. So just reach out to me, Crystal Safari Roy at the Safari Group, and let me know how I can help you. We've got several options available to help you prevent foreclosure. Have a great day, and I'll talk to you soon. Bye-bye.